Before we jump in, just a quick reminder that this explainer is strictly for informational and educational purposes. It's not financial advice, so please always do your own research and consult a professional before making any investment decisions. Okay, welcome to today's explainer. Today we're unpacking the incredibly dynamic current state of Safran SA. We are looking at a true aerospace titan here, a CAC 40 powerhouse with a massive market capitalization of around $150 billion. To put their scale into perspective, they have a global workforce of over 110,000 employees and pulled in an astronomical $31.3 billion in revenue in 2025 alone. Today, we're going to break down the numbers, the unapologetic strategy pivots, and the future vision of a company that is quite literally powering modern aviation. Okay, let's dive into this and outline the momentum blueprint we'll be following today. First, we'll meet aerospace giant Safran. 2, review their record first half 2026 results. 3, explore the LEAP engine boom. 4, discuss a major defense pivot. 5, see how they're funding the future of flight. And finally, 6, we'll cover the market outlook and risks. Section 1, meet aerospace giant Safran. To really understand Safran, you have to look at where their money comes from. Their true power lies in the propulsion division, which drives a full 50% of their entire business. This is largely powered by CFM International, which is their wildly successful joint venture with GE Aerospace that produces the LEAP engine family. Honestly, if you've flown on a Boeing 737 MAX or an Airbus A320neo recently, Safran literally pushed you through the sky. Rounding out their business model, we have equipment and defense systems bringing in 39%, and that covers everything from landing gear to biometric identification systems, with aircraft interiors making up that final 11%. Section 2, record first half 2026 results. Now, what's really interesting about this slide is how they achieved this massive 18.4% operating margin. In the first half of 2026, Safran's revenue hit 17.571 billion euros. That's up a very impressive 20.2% on an organic basis, meaning that growth is purely operational, excluding currency and scope changes. And that top-line growth translated beautifully down to the bottom line. It drove recurring operating income up 29% to 3.237 billion euros. That specific surge is what pushed their operating margin up a full 140 basis points to hit this record 18.4%. I mean, they are operating with just incredible efficiency right now. Safran CEO Olivier Andres didn't mince words about this either. He called the first half outstanding and noted they completely outperformed expectations. And well, he's got the metrics to back that up. Free cash flow didn't just walk upward, it jumped a massive 43% year over year to 2.616 billion euros. Adjusted net income also rose 21% to 1.92 billion euros. So when the CEO talks about strong momentum sustained by their teams, these billions in pure cash generation are exactly what he's referring to. And because of this soaring financial momentum, Safran didn't just pat themselves on the back. They confidently raised their full-year 2026 guidance across the board. They are now projecting mid-teens revenue growth for the year and a recurring operating income landing somewhere between $6.4 and $6.5 billion. You have to understand, in the complex world of aerospace manufacturing, raising your full-year guidance midstream is a massive show of confidence in your ability to execute. Section 3, the LEAP engine go. Just listen to this blistering pace of production and sales. Through that CFM joint venture we talked about earlier, they delivered 1,030 LEAP engines in just the first half of 2026. That is a 41% increase year over year. Q2 alone saw 510 deliveries, making it the 4th consecutive quarter they've pushed out over 500 engines. And the pipeline is completely packed. They just announced an agreement for over 1,000 LEAP 1A engines with Indigo at the Farnborough Air Show. But you know what the real hidden gem is here? Civil services revenue climbed an extraordinary 40.4%. That's heavily bolstered by those highly lucrative rate-per-flight-hour aftermarket maintenance contracts. Because of all this demand, Safran officially raised its full-year delivery growth target for the LEAP engine to nearly 20%. Section 4, a major defense pivot. That number, 33, represents the deliveries of the M88 engine in the first half of 2026. Now, on the surface, 33 might not sound like a huge number for a massive global factory, but you have to realize these are highly complex military engines strapped to the back of Dassault Rafale fighter jets. 33 units means they more than tripled the number they delivered during the exact same period last year. This huge surge in military hardware really helped the propulsion division achieve that incredible organic revenue growth of 27.7%, boasting a stellar 24.5% operating margin. They are clearly firing on all cylinders in the defense sector. And this brilliantly illustrates a massive strategic shift. On the very same day as their earnings release, Safran confirmed they are halting development on the engine for the FCAS program. That was a Franco-German Spanish fighter jet project that basically collapsed in June due to corporate differences. Funding for that joint effort officially dries up in September 2026. So, instead of clinging to a dead $100 billion project, CEO Andreas made a ruthless national first prioritization. Stating they really only have the resources to fund one combat engine, they are now doubling down on the lean, modernized M88 T-Rex. This upgrade will boost thrust to 9 metric tons and increase electrical power for next-generation avionics, aiming perfectly for a Rafale F5 first flight by 2031 or 2032.
Section 5. Funding the Future of Flight?
So, what are they doing with all this cash? Enter the Takeoff Project. That stands for Technology and Knowledge for European Open Fan Flight. Backed by 100 million euros from the EU's Clean Aviation Program, this initiative aims to develop a revolutionary open fan engine architecture as a core part of the CFM RISE technology demonstration program. By opening up the fan architecture, essentially getting rid of the traditional engine casing, they're targeting a massive 20% improvement in fuel efficiency for next-generation engines. And a 20% jump? That isn't just a win for the environment. It completely alters the baseline economics for commercial airlines. It's a huge collaborative effort, too, uniting 25 partners, including industry heavyweights like Airbus, Aero, and GKN Aerospace. Let's move to and see how this builds into a concrete roadmap for the future. The project officially launched in March 2026 with those 25 partners. The midterm goal here is to achieve technological maturity for a major flight test campaign in 2029, using an Airbus A380 testbed. If that test campaign is successful, we could literally see this next-generation, highly efficient open-fan engine implemented in commercial fleets by the mid-next decade. It's a real game-changer. Section 6, Market Outlook and Risks. Let's talk about how Wall Street is digesting all of this. As of August 2026, the stock has been trading around the €354 to €364 mark. It's up about 19% year-to-date, though we have seen some recent weekly volatility. Keep in mind, it trades at a somewhat premium 38.7 price-to-earnings ratio, with a 52-week range stretching from $262.60 up to $364.20. Now, among major financial firms, sentiment is largely very bullish right now. Bourbon Bank contains a buy rating targeting €400. Both Goldman Sachs and Barclays have buy ratings with a €390 target. Jefferies is playing it a bit more conservative, holding steady with a €340 target. So the average institutional target hovers right around €368 to €379. Yes, but proceed with caution here. Interestingly, over the past quarter, corporate insider sentiment has actually turned negative. There has been a very noticeable increase in company insiders selling off their shares. When you compound that insider selling with the inevitable execution risks of ramping up LEAP production so fast, plus potential certification setbacks for new technology, and broader geopolitical uncertainties affecting their defense roadmap, well, the picture definitely gets a bit more complicated. Which leaves us with this critical question. Does Safran's soaring momentum, its massive cash generation, and its bold innovation roadmap justify its current elevated valuation, especially when corporate insiders are taking some chips off the table? It's a fascinating dynamic between pure operational excellence and market valuation. As always, take this information, dive into the sources yourself, and come to your own conclusions. Thank you so much for joining me on this explainer diving into Safran, and keep learning.